All right, welcome to Talk Tickers. Today we are digging deep into Dr. Reddy's latest earnings call for Q3 of fiscal year 26. The market had a really fascinating reaction to this report, so let's break down exactly what went down and, more importantly, why.
Okay, so here's how we're going to tackle this. We'll kick things off with the headline numbers. Then we'll get into the real story of the quarter, which was this kind of tug of war between growth and, well, a grind. After that, we'll look at their big pipeline pivot, see how the stock actually reacted, and then we'll wrap it all up with our take on what to watch for.
All right, let's jump right in with those headline numbers. This is always the first thing Wall Street looks at. And honestly, for Dr. Reddy's, it was a bit of a mixed bag.
So the top line, the revenue, actually looked pretty solid. They brought in $971 million, which beat what analysts were expecting by almost 4%. So that's the good news. But when you look at the bottom line, the earnings per share came in at exactly 16 cents. Right on the money, no surprise. So a beat on sales, but just meeting on profit, that right there tells you there's a much more complex story happening just under the surface.
And that story is really a classic battle, The main theme this quarter was this fight between incredible strength in their international businesses and this persistent, grinding pressure they're facing in the super important U.S. generics market.
And wow, this chart just lays it all out, plain as day. Look at this. Emerging markets were just on fire, up a massive 32%. India also had a really strong quarter, up 19%. This amazing performance completely covered up a really tough 16% drop in their North American generics business. So the takeaway here is pretty clear. Without that international growth, this would have been a very, very different and much weaker quarter.
And you better believe management was quick to frame the story around this exact point. The CEO, Eris Israeli, made sure to emphasize the health of the underlying base business. He was basically signaling to investors, hey, forget the U.S. for a second. The core engine of this company is still growing strong. That was their key message on the call.
Okay, so let's shift from the past to the future and talk about guidance. Because honestly, the real reason investors got excited wasn't about last quarter's numbers. It was all about the company's big strategic pivot, focusing on the massive opportunity in their drug pipeline. And here it is, the main event. The spotlight is squarely on Semaglutide. Yep, the generic version of those blockbuster GLP-1 drugs for weight loss and diabetes. Management laid out a super clear timeline. They're targeting launches in India and Canada in the next few months, with filings in Brazil and Turkey coming right after. This one single catalyst is the potential game changer that absolutely everyone is watching.
But, and this is a big but, it's not a slam dunk. The company was upfront about several hurdles. They've got an FDA warning letter at one key facility and some other regulatory issues at their biologic site. You add that to some delays on partner drugs, and it creates some real uncertainty around those launch dates. It definitely puts a bit of a damper on all that pipeline optimism.
So you have this messy picture, right? Short-term weakness, long-term promise. How did the market, what we call the tape, actually process all this? Well, this is where it gets really interesting. Let's look at what the stock actually did.
First, you gotta have some context. Coming into this earnings report, Dr. Reddy's stock was getting hammered. Over the past year, it was down over 9%, while the S&P 500 was up over 13%, and the pharma ETF was up a staggering 32%. So it's safe to say expectations were pretty low.
So, as the call kicked off before the market opened, the initial reaction was negative. The stock was pointing down almost 1.5%. Investors were clearly zeroed in on that 16% drop in North America and those regulatory risks we just talked about. The first impression was definitely pessimistic.
But then, the market did a complete 180. As the trading day got going and people had time to really digest the whole story, especially that semaglutide timeline, the stock just rallied, and rallied hard. It ended up closing the day up more than 4% from that pre-market low. What does that tell us? It tells us that investors decided to look through the current problems and place a bet on those future catalysts.
So that brings us to our final section, the next call. Let's pull all this together and talk about how we're thinking about the stock from this point forward. After all that, the big question remains, what's the trade on Dr. Reddy's now? With all this new information out in the open, how should you be thinking about this stock?
Here's our framework, broken down into 4 steps. 1. You just have to accept that the U.S. generics business is probably going to be a problem for a while. 2. The entire bull case, the whole reason to be optimistic right now, hinges on them launching semaglutide on time. 3. You absolutely have to watch for any news, good or bad, on those FDA issues. And finally, number 4, you position yourself for the stock to get re-rated higher if and only if they hit those big pipeline milestones.
So for now, our rating on the stock is market perform. The risk versus the reward feels pretty balanced. The headwinds are real, but so is that big catalyst. That said, we have a very clear trigger for an upgrade. If and when Dr. Reddy's gets that Semaglutide approval in Canada, proving they can execute, we would upgrade the stock to outperform. That is the key milestone to watch.
And as always, please remember this is not financial advice.